14,376 and 350 up on the Nifty.
We're up over 1% on the benchmark indices. The Nifty is now zooming towards that 14,500 mark.
The mood is exuberant, not just because of what the market is doing, but because of that big India win.
Green across the screen with the market and, of course, the Indian cricket team's performance taking things higher. The mid-cap index outperforming the large-cap indices as well.
Markets regained yesterday's losses. Nifty and Sensex gained over 1.5 percentage points. Financials lead from the front. HDFC Twins, ICICI Bank, Reliance gained the most.
NBFC's rally after former RBI Deputy Governor H.R. Khan tells CNBC TV 18 that RBI is unlikely to impose CRR, SLR on non-deposit taking NBFCs. Chola Finance, Shriram Transport and L&T Finance gain anything between 5 and 8%.
And Mindtree soars after it reports best third-quarter growth in a decade. CEAT rallies 5% after its earnings comes in better than expected. Indiabulls Real Estate also jumps after it clocks in 1,000 crore rupees of new property sales in the quarter.
India wins a thrilling test match in Brisbane to seal an epic series win in Australia. Rishabh Pant's heroics in the last hour take India home as Australia lose a test match at the Gabba after 32 years.
The Indian players will be on the field.
Yes, I guess that cricket win is going to be the headlines, no matter whether you're talking about sports or the budget or, the nationally important news of the day. But welcome to Markets today. In this show, we're going to tell you all that happened in those absolutely 6 exciting hours of trading today in just 5 headlines. It's a little tough to wrap everything up in headlines because the excitement was palpable from the word go, and the Nifty gaining almost 4 digits at one point in time and then settled with an 800-point gain. Hi, Prashant.
Latha, hi. Cricket and markets, right? I mean, they make a perfect combination.
2 things to cheer.
And most market wallahs are big cricket fans. I mean, who isn't, right? So, I mean, I don't think we need to make a differentiation there. We have lots lined up here over the next 30 minutes. So, Friday and Monday, big sell-off, and today, a really big pullback, which basically takes us all the way back, almost to where we fell from. We'll tell you if this is going to go on and we make newer highs. We'll be joined by Jeff Chaudhary, Chairman, RLC Ventures, to discuss the day's market action. We also have former RBI Deputy Governor H.R. Khan on NBFCs, the big sector which did the big moves. And in key corporate voices, we have managements of Mindtree and Hudson Agro on their third quarter performance. Numbers came in pretty good. So that's essentially what we have on the show over the next 30 minutes. As always, let's spend 2 minutes looking at the day itself. Latha.
Well, we would like to think that India has done very well, both on the cricket ground at Gabba and on the bourses. But really, this is a global bull charge. 2.5% higher on Kospi, Nikkei over 2% higher across European markets. There is green. It's clearly Chinese growth, perhaps, or Yellen stock that the government needs to spend big. She is going to be the next Treasury Secretary for Joe Biden. And therefore, if the mother economy talks about big stimulus, there is a bull charge across all by equities, across all risk assets, actually. And then you have the Sensex and the Nifty coming within 1% of their record highs of earlier this month, and the mid-caps as well coming within 2% of its record highs achieved a few days back. And as you pointed out, realty and NBFCs have been the sectors expected to benefit more because they'd been beaten down the most over the years. They were the ones that led the charge. But good results also. I mean, we could point out many, but you do that. What stood out for you?
All green, Latha. Not a single stock that I'm going to talk about is down. Although there were stocks which were down, but I mean, that would be missing the point today. Look at what we saw in terms of gains, right? Sectors, as always. Real estate, top of the pack in terms of gains. Metals, number 2. PSU banks, number 3. The mid-cap index at number 4. Private banks and pharma. I mean, actually, not a single sector was in the red. NBFCs, large, small, mid, everything was on fire, and we'll talk more about that. But look at this. Bajaj Finserv, Bajaj Finance, HDFC Limited from the large Nifty pack, L&T Finance, Chola Finance, Shriram Transport, IDFC, all from the broader market. The other Nifty, ex-NBFC, the other big Nifty gains coming in from Tata Motors, which is picked up right where it left off on, yesterday. We have Grasim, which did see big gains. L&T is almost, what, 1,400 now. Adani Ports, doing well. Cipla, Bajaj Auto, Asian Paints, JSW Steel, and ICICI Bank. I mean, so it's essentially the market picking up where it left off before the sell-off on Thursday, actually. The broader market gains coming through in names like Tata Elxsi, which is, I think, just gone absolutely berserk. 12% yesterday and today. If you just take sort of the last 2 weeks, it's up almost 30%. Indiabulls Finance, Indiabulls Real Estate, Jindal Steel, L&T Technology Services, Federal Bank. Some of these, of course, report tomorrow as well. I think Federal reports tomorrow. Yes. Indiabulls Real Estate, I mentioned. Apollo Tyres, Hindustan Zinc, Adani Green was up 5%. There was Indian Bank, Sequent Scientific, Radico, Soba Developers, Oberoi Realty. A very long list of pretty strong gains all across.
Okay, thanks for that, Prashant. And now let's invite our guest. We are joined by Jeff Chaudhary of RLC Ventures, a veteran investor, not just in global markets, but in Indian markets as well. Jeff, thank you very much for joining us, and a very happy 2021 to you. We are speaking to you for the first time in the new year. Well, what should we be prepared for in 2021? Is this the last leg of a euphoric rally, and that is why these precipitous falls? Or these falls will come, but the markets go on notching higher and higher highs? Which is the truth?
Thanks for having me on again, Latha. I appreciate it. It's interesting that we're talking about market highs and around the world in the middle of a global pandemic. And this is kind of an odd to a lot of people because the economy is in really bad shape and we have lockdowns in half the world. So why is that happening? And the reason why it's happening basically is that we continue to have a global liquidity surge. So, I get asked a lot about valuations, economic growth. You talked about China just earlier. But unfortunately, for the time being at least, while we have this surge of liquidity and we've got now a democratic president who's going to open the taps even more, and we have Nelson, who's going to be very, very, very accommodative. We do have this surge of liquidity, and I'm afraid, whether it's good or bad, this party will go on for some little while we have this issue. And it's no surprise to me that sectors which have been beaten up, areas of the market which have not done so well in the last few years, are now attracting attention for that particular reason.
Jeff, hi, Prashant here.
Hi, Prashant.
Can we, you said, well, this will go on. Can we look at the last big event, which was the global financial crisis, the response function to that, how markets behaved post that, to map out, what lies ahead? Because, back then also real accommodation started by central banks. It was looking, there was no end date to it, right? It's only increased all over the last 10 years. It never ended, so as to speak. There was some taper, but didn't last too long. So can we look at how markets behave? The rebound is almost identical, and we can put out some more data later. But what are your thoughts? Does that give us a guidepost? Yeah.
Yeah, there are some similarities and there's some differences. The similarities clearly is at that point in time, we had a global financial crisis. And obviously we had a situation where some people thought that the actual entire banking system would go under. Here it's a very different one because it's affected every single person, every single economy in the world with this pandemic. And I think while economies are in trouble at the moment, in a real sense, the taps will remain on. And while the taps remain on, prices, all risk assets, whether it's properties or equities, will continue to go up. But what we have to look forward to is a couple of things. First of all, this is not going to last forever. The vaccine rollout program has obviously already started in many countries. And I would suspect in the next 6 to 9 months, we're going to have a very good vaccine program. Secondly, the recovery will start to come through. Obviously, we start to see it in China, and eventually will come to Europe and India and the US. So I see this very much as a 2021 phenomenon of very abundant liquidity driving prices much, much higher. I think there's a bit of an issue really in terms of 22 and 23 because of that. But certainly, it's a bit like a roller coaster. Enjoy it while it rides. Enjoy it while it goes up, and then just be careful when it comes down on the other side.
Yes, that's true. But what's your own pecking order, Jeff, between developed markets and emerging markets? Within emerging markets, the pecking order. Within India, the pecking order.
Yeah, I see two themes really for the next couple of years. One, which we haven't seen for a period of time, is weakness in the dollar. And that's linked to what I said earlier in terms of there will be a spending boom in the US that will push the dollar down, which conversely means it's good for emerging markets. Emerging markets as an asset class have done pretty badly over the last 10 years relative to the US. I see that phenomenon changing. The second thing is that we have had a period of oil price weakness, and I suspect as oil prices recover and economies recover, that there will be beneficiaries for companies which do well in an oil price. So a weak dollar, strong oil price, strong in emerging markets, and I think within that, India will do well as a flow of capital flows from developed markets into emerging markets.
But what are you buying here? Are you buying these NBFCs, realty? The guys, as you said, have been bashed up for a goodish bit?
Yeah, I think so. I think it's all, it's at the end of the day, it's all about management. And if it's quality management in a bad sector, or a bad, a company which is not done too well because of the economic environment, absolutely, I think it's a good environment to bid. Don't get away from the sort of high quality stocks, like the HDFC banks and the TCSs and the Bajaj Autos. Don't stray away from them as well. But I think some of these beaten up sectors, I think, will do pretty well. And as I said, I think because of my expectation of a stronger oil price and a weaker dollar, I think companies like Reliance should do very well in this environment as well.
Actually, I was going to take up that theme as well. Since you spoke about high oil prices, will this commodity boom also continue? Copper, aluminum, more importantly, steel. There's almost a shortage of steel. So would you ride Tata Steel? That's one of the big gainers and such like.
Yeah, I think this is the right point in the cycle to be buying economically sensitive, where people are expecting a recovery. There may be shortages in particular sectors. And remember, the time to sell these stocks is when the recovery is actually happening, not now when we're expecting the recovery based on liquidity. So yes, that's absolutely the case.
Hey, all right, Jeff Chaudhary, it's always a pleasure having you with us. Thank you very much for joining us. And once again, have a glorious 2021, a healthy one.
Thanks very much. Bye-bye.
Bye. All right, you stay tuned in. We are going to take a quick break and be back and tell you all the itsy-bitsy detailed stories from the street.
Welcome back. You're still with us here on Markets Today. The market, of course, ending 200 plus points higher. It's been a fantastic session. We are taking you through what mattered in terms of the stories and, of course, getting you the opinion as well. NBFCs was one space which rallied in trade after the former RBI Deputy Governor, H.R. Khan, told CNBC TV 18 that the RBI is unlikely to impose CRR, SLR on non-deposit taking NBFCs. Stocks like Chola Finance, L&T Finance, Shriram Transport soared anything between 5 and 8%. Meanwhile, the RBI is expected to unveil its proposals to strengthen regulatory supervision of large NBFCs. Latha, where does this story stand now?
Actually, the reason why a lot of NBFCs, one of the reasons why you saw them selling off over the past several days was this fear that there's going to be scale-based regulation, as a DG once said many months back in November, and the governor repeated last week. So that's what triggered the selling. But thereafter, when we spoke to some of our sources, our Reserve Bank deputy governors, they pointed out that, RBI has always worked with the philosophy of this grand bargain between savers and institutions. Banks that tap the savers, the lowest common denominator, have to, as a matter of security, keep money in CRR, about 3% of their deposits or 4%, and keep about 20-25%, depending on the law of the land, in government securities as a matter of safety. And CRR, because, suddenly you run out of cash and your depositors are coming for cash, you have to give it to them. Now, NBFCs don't give you current and savings account. They don't access the depositors' money. So they were not asked to keep this. Now, this deputy governor argued with me, he's a former deputy governor. He said, you can't implement only one leg of the grand bargain. You can't only tell them to keep CRR, SR. Now, CRR is actually out. It's a monetary policy instrument. When you want to loosen liquidity, the RBI reduces CRR. It's got nothing to do with prudential management. So CRR will definitely not come. The fear was of SLR, but he argued that there isn't a case. Then we spoke to Mr. H.R. Khan, another former deputy governor. He spoke on the channel and he said non-deposit taking NBFCs are clearly cannot be asked to keep SLR, but it's possible that deposit taking guys are asked to. In fact, already they do keep a little bit of SLR as well. SLR is really government securities. You have to keep it, banks have to keep 20% of their deposits in the form of government securities. The slang for that, the jargon for that is SLR. So already the deposit-taking NBFCs have to keep 15%. And then all NBFCs, large ones, have LCR requirements, liquidity coverage ratio. That is the amount of money that they are likely to lose in a month. They have to keep as ready cash instruments, which is government securities. So their point was that this is all already there. Chances are that only higher capital or more rigorous regulatory measures. Banks present their data in a very rigorous form to the RBI. NBFCs, big ones, which are financially systemic, may be asked to do the same thing. Supervision would be oftener. These are the kinds of things they are expecting when it comes to scale-based regulation. That was a big relief, and you saw all the NBFCs rise.
Okay. Let's actually listen to the conversation with former Deputy Governor of the RBI, Mr. H.R. Khan, and listen from him on the matter.
Focus would be much more on risk management, corporate governance, audit functions, board functions. I think these will be much more tighter and much more in alignment with the banking space than jumping to SRR, CRR right away. Maybe for the deposit taking NBFCs, which are around, I think, around 60, 65, that could be an option. But for the major players, I think it is all on the risk management side, governance side, audit and assurance function side, how much in terms of customer protection, fair practices code to further strengthen, and cyber and IT security. These are the areas I think that will be the focus of the regulation. In the recent past, there are hardly any new NBFCs added to the deposit-taking framework. But once they put a much more robust framework, possibly they will look at that. But my sense is that RBI will not be too enthused or too encouraged to open the floodgates of deposit taking by the NBFCs.
Okay. And then the third headline from the street today, most of the results were good and they were cheered by the market. For instance, Mindtree gained 1.5% after the company posted a robust set of third quarter numbers. This was Mindtree's best Q3 in a decade. These stocks have already run up, so Mindtree just caught up after what it lost in yesterday and day before trading. Reema Tendulkar is here with the details of Mindtree's Q3 performance.
Well, it's clearly a good quarter for Mindtree. The company's reported its highest dollar revenue growth of 5% in over a decade. Margins have come in at an 11-year high, and across the board, there is a material beat compared to expectations. So constant currency revenue growth at 4.6% compares with estimates of about 3.8%. The management is also confident about the growth trajectory sustaining from here on, and EBITDA margins holding above the 20% mark. But remember, the stock has also done well. It's up nearly 94% in the last 1 year. Its valuations currently at 22.5 times FY22 EPS is higher than its historical multiples. Just a quick word on the brokerages. Kotak has a sell call on the stock because they believe the stock looks expensive at current valuations, but Goldman Sachs is extremely bullish on Mindtree because they've set the target price at 1,998.
Reema, thanks very much for that. Actually, in a conversation with CNBC TV 18's Mugdha Warrior, Debashish Chatterjee, Managing Director and CEO of Mindtree, said that the company's deal pipeline has been strong and it actually continues to add to more work. He added that they were aggressively pursuing automation.
In terms of deals, the pipeline has been pretty strong, and we have had a good order book this quarter. We have crossed the $1 billion mark in terms of order book, which is a significant achievement. The deal sizes definitely continue to increase. Utilization has gone up significantly, and that has gone up because we have been able to reskill our people very aggressively on our digital platforms. Second thing is the pandemic has also helped in terms of offshoring. The shoring has increased. And last but not the least, we have been also pursuing an agenda of automation in a very aggressive fashion.
Okay. We have more results. Hatson's Agro stock gained over 4% after the company reported a good set of third quarter numbers. We spoke to the company's chairman, Mr. R.G. Chandramogan, and he said the margins, which were very good, are sustainable at current levels and could even get better. He also has his capex going. Listen in.
And we believe that probably we can sustain this margin or improve on it better. I think we may end up at a 6% overall growth for the year, and most of the growth has to come in the fourth quarter. Outlets, earlier we were doing about 9% of the total company sales in retail outlets. During the time of COVID-19, probably a lot of walk-ins have improved. And today we are almost doing about 13 to 14% on the retail outlets. This is one of the reasons the margins have increased.
Okay, India Bulls Real Estate was up almost 12% after the company reported a 64% jump in its consolidated profit in the third quarter. But the revenue dropped more than 41% and the EBITDA came in almost 3% higher compared to the same period last year. It came in at 129 crore rupees.
Okay. More from the earnings corner. CEAT surged more than 5% after it reported better than expected earnings. For details, Sonia Shenoy.
Well, thanks a lot for that. It was a good set of numbers that came in from CEAT. In fact, the revenues went up 26% for the company, and the margins as well have gone up almost 430 basis points, coming in at 14.7%, while the profits have more than doubled at 132 crores. Now, the reasons for the good numbers was, one, of course, there's been a huge recovery in demand, not only from the OEMs, but also replacement demand has been very strong. And two, CEAT has supplied to a lot of the new launches, whether it's the Mahindra Thar or even the Nissan Magnite. So they've got additional revenues from there. Even if you look at the operational performance, raw material costs have been higher, but CEAT has managed to pass them on to the customers, and that has offset a lot of the commodity cost pressures. So all in all, good set of numbers coming in from the company, and the stock closed in the green today.
All right. On that optimistic note, we wrap up on market action. But let's leave you with some historic images.
Oh, absolutely. The Indian team won the fourth test match to seal an epic series win on Australia. India's young guns breached the fortress at Brisbane, where Australia lost a test match after 32 years. Rishabh Pant and Shubham Gill led from the front to take India home. We'll leave you with some memorable and iconic visuals from this historic win. Thank you for watching. More coming up in a bit.
Right down the leg side, not going to be easy. Oh, they're ball on the offside, so he gets that single. So Rishabh Pant will again strike. And he's gone back for the second. That's a four! What a surprise is that? We were wondering about one or two. It's a four. Rishabh Pant has done it. The Indian players will be on the field. What a result this is.
I think this is one of the biggest thing in life right now. And I'm happy that all the support staff from the team and all the fans over here supported me a lot.
All the players who have played their part, so many of them will realise exactly what they've done and know that they've played a significant part in this outcome.